Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is Tuesday, and I don't know. Forget about today. It's no big deal. No big deal today. Nothing. Tomorrow is the big day CPI. So let's see where we are at here. I'll start out with the treasuries. Yesterday, we saw a little bit of a bounce in the treasuries. So this is where the regular session started. And into the close even, it was spiking. So I think that we did get some sort of a meta order buying it here. And we'll talk a little bit more later about why I think this might be coming in here. But we should note that this 050 area has turned out to be like a really big rut. It was doing it yesterday, and now that we're touching it today, we're kind of seeing a little bit of similar action. Okay, S&P 500 started out with a pretty hard sell, but they completely bounced as well. So I don't know. Maybe we can start seeing, the rotation here. We should see those banks continue to move up. Oil, kind of a little bit of a similar thing. They were a little bit of a downer, but today they've recovered to 79.50. And all of the reports and everything else still looks really bullish for oil. Natural gas, they're still pretty high here. They're still above 4, so we'll see. I'm really concerned if they start rising up and we get to like $5 and stuff for Europe. That could cause some real problems over there. Gold recovering overnight and now back above the 1800 level. I tell you what, we've been around that level for such a long time. Silver, and Kappa is copper has been trading a wide range these days, but it's been a range. And then we got to talk about the Bitcoin. So Bitcoin hit 40K yesterday, bounced pretty good. I wouldn't be surprised if we see it test again today. I think that it's going to mess around with this 40K level like a ton. It's going to be really effing annoying. You're going to be so sick of 40K, all right? And then the dollar's looking not too shabby. I mean, they did take a little bit of a hit yesterday. Well, I take that back. On the 7th, last Friday, they took a bit of a hit. Still maybe recovering over there in the dollar. All right, so tomorrow we have the CPI. Now, here is the key point, okay? The market is pricing that the Federal Reserve will raise interest rates 4 times this year, okay? But if you look at the dot plot, the Federal Reserve, there are more dots at 3 than there are 4, okay? So the Federal Reserve thinks that there's going to be 3, and the market thinks that there's going to be 4. Yesterday, Jamie Dimon got on television, and he said, I would be surprised if they did just 4 this year. So Jamie Dimon's saying that there's going to be 5 or more. I don't know. I don't know if he has some sort of inside track. He might just be saying that because, raising interest rates are good for JP Morgan, right? Well, this morning, who was it? I don't even remember which Fed speaker it was. I don't even think that it was a voting member, but let's see here. Bostic. Okay, so Bostic is a 2024 voter. He's not a voter right now. And he says that he sees 2022 hikes with the risks on a fourth on the possibility of higher inflation. Okay. So let's come back and look at what we've got for CPI tomorrow. All right. CPI and core CPI. So if we shall recall, last time around, the core CPI number, remember, core CPI excludes energy, right? The core CPI number was right in line with expectations at spot 5. And it was less than the previous month, which was like what, spot 6? Yeah, it was spot 6 the previous month. Okay. So the last report they were saying, maybe we are already past peak inflation and it is coming under control. So what do we have for the estimate this time? The same as last time, spot 5. Okay. So if this number, this CPI number comes in at spot 4, then that increases the possibility, or at least according to Bostic, that means the Federal Reserve will only need to raise interest rate 3 times when the market is pricing 4 times. See what I mean? So that's why this report is so important. It's one of the few times where it's like, based on how that report comes in, could be the difference between a rate hike or not, right? Now on the split side, if this comes out and this is spot 7, that core CPI was spot 7, then we go into the Jamie Dimon scenario, right? Like, I would be surprised if they did just 4, right? Because then it means that inflation is not under control, right? Frankly, even if they did a spot 5, it might be advantageous for treasury bulls. 3 times versus 4 times makes no difference. I mean, it makes a big difference to the market pricing, right? Like that would take us back. Where would that? I'm too lazy to go in and try and calculate like what a percentage change is. What a quarter of a point changes. I think that might take us back to 129 area. So could take us back up into this area. But we'll see. But you probably think that you're probably of the opinion that the market just can't handle it, right? I do think if that CPI comes out, how do I put this? Okay. I think one of the things that the market, and particularly the retail trading market, does not understand is that the Federal Reserve's dual mandate is maximum employment and price stability. If we have already reached maximum employment, which according to their metrics we have, of course, the labor participation rate isn't super great, but I'm not so sure that the labor participation rate is really ever going to come back in that respect. I think that there are people that didn't have to work and they've just said to hell with it. I wasn't making that much anyways. Okay. Don't need it because we stay home all the time now. Could be the case. Okay. But if we've reached the maximum employment, then at that point, the only thing that matters to them is price stability. So everybody thinks, the Federal Reserve will back off when it starts to affect the stock market. Not if we are continuing to see inflation, right? As long as we're getting readings of spot 5 and above, the Federal Reserve is going to tighten. And yeah, it will create some carnage in the markets. For us, we should be okay. I say we because I'm assuming you're going to have a asset allocation that is more complicated than just everything in the S&P 500. Okay, if you're 100% just in the S&P 500, you might want to rethink that. And right now, I think where we want to be going is we want to be going into insurance, energy, materials, and banks. Okay, those are the four major sectors that are going to do well in a rising interest rate environment. And over the long term, if we continue to see inflation and rising interest rates, those materials in particular are going to do very well, or at the very least offset some of your other portfolio losses, right? Less loose is not tight. Well, it is true that even if they raise interest rates like 4 times here, that's still incredibly easy monetary policy, right? I really kind of wonder when you look at so one of the things here is that the market is like reacting to like these rote models, which it was really kind of foolish, right? Like interest rates are so low that means that our valuation can be higher, and it's like, yeah, but those rates aren't going to last forever. You really think that they're going to last forever? um but anyways, um if they need to continue raising interest rates, they're going to keep doing it, and it could hurt some sectors of the economy because some sectors of the economy were just overvalued to begin with, right? But given the current situation, I think that spot five is probably. I think that it's going to be spot five or spot six. I don't think that it's going to be less than expected. So I think that 3 or 4 interest rates sounds about right. But that's why I'm buying here. Because if the market is pricing in 4 rate hikes, and I don't think that they're going to be going to 5, then why should I be selling here? And I think that is why we got that meta order buy yesterday. I think that was a hedge fund came in and made a bet that we're too low. So that means that we'll be back to so we'll have some pretty crazy action tomorrow. You'll end up at the same rates that you were using to stimulate the economy before. Kind of, Lucas. So the problem isn't the rate itself. Okay, so this brings us to the other part of this discussion that we've got to have. Okay, so the thing that you got to remember is that this is not just the market is not just freaking out about the rate, right? This is not just about the rate. The big surprise in the FOMC minutes was that they were also reducing the balance sheet. Okay, so when you reduce the balance sheet, what you're essentially doing is you're taking treasuries, assets that were just sitting on the balance sheet of banks, and you're going to be forcing them out into the markets, and investors are going to have to absorb them, right? And that raises interest rates. That is a drain on the economy. It straight up is. Like when banks have all those assets and they have all of this money to do stuff, the traders sit down and they go, "Oh, okay, we can go and do this hedge fund. They wanted to put a bet on oil, but we couldn't give them a good price on it because we just, because of our liquidity restrictions and so forth, we couldn't do that trade. But now that everything is easy and they've given us this extra collateral, now we have the ability to carry out those transactions. So there is straight up business that occurs that wouldn't otherwise occur because of what the Federal Reserve is doing with its balance sheet. Okay. Remember, orders move markets. Okay. So those actions by the Fed directly result in orders. Okay. Now, if they are pulling that back, then that's a lot of trading business that's not going to happen. Okay. So it does tighten. It has a significant impact. So even though you might still be below the neutral interest rate, the other things that they're doing are going to tighten on the economy and cause indexes to come down a bit, right? It doesn't mean that like the stock market's going to crash and that it's going to result in a recession, although that's what a lot of people think it's going to be, right? But 10 to 20% correction would probably be appropriate, right? But I'm not even sure if it's going to be that, because at the same time, the economy just looks really strong, and a lot of people were concerned about Omicron, and this is kind of looks like it's fizzling out. In fact, we're even another thing that I'm seeing that's bullish is that it really seems to me like policymakers are backing off. Like before, I think that there was some tendency for policymakers to be too aggressive on the coronavirus and really push this, we need to get everybody vaccinated so that we can kill the virus, and so on and so forth. And that is not playing very well with the public anymore. And so what you are seeing now is that they're starting to backtrack. So this is why you get the CDC saying things like, well, most of the people that are dying, they weren't actually dying of coronavirus. They had like 4 other comorbidities, and the real reason that they were admitted to the hospital was because of one of those. And so like they're backtracking, maybe because of the politicians, maybe because the science and the situation is changing, but this like we need to be super aggressive on lockdowns, all that sort of stuff, it's kind of easing. And I think that what you're going to see is that the policy is going to trend back towards where we've been saying it should be all the time, which is that this is going to be everywhere and that probably everybody is going to catch it in some degree or another. And it's like the flu. And hey, booster shots, sure, booster shots, but like once a year, okay? Because giving people like 4 or 5 booster shots in a year is apparently a bad thing, right? The UK government was advised against doing the 4th booster shot, was my understanding. Well, I'm not concerned about Omicron, but the market definitely reacted to it, right? Like if we come back to the chart here, because I have it all listed, right? Maybe I don't have it listed on my treasury chart. Right? Omicron fears have dominated this market since December 1st, right? And we're only just barely above the price levels where that even came in. So, but there's still some fear. There was still some fear out there. I think that what little might be left is going to come out, and so there's still kind of this thing like, will supply constraints lead to somewhat of a slowdown in the first and second quarters? And I was seeing that argument being made quite strongly mid-December, which is where people were saying like they're not going to actually raise interest rates. But as Omicron is eased and people have come in more in line with what the Federal Reserve says, but it's like it's a risk, but it's not a risk that's actually happened yet. Um, then they come back into, oh, okay, actually we do need to raise rates, right? Like the economy does look strong. So if the economy continues strong throughout the first quarter, then yeah, that they're definitely going to raise rates like 3 or 4 times, right? Like the only way that they don't raise interest rates 3 or 4 times is if the actual economy starts to falter. Now, them testing the Fed put per se, that could cause them to back off if it's actually having real effects on the economy, right? But again, everybody seems to be working under this environment that doesn't exist anymore, right? Where all of the macroeconomic factors are deflationary and so on and so forth. And at least for this next year, that is not the case. That is not the case. And so I think that there's a lot of people that are prone to think that the Federal Reserve can't raise interest rates that are just wrong. And I mean, honestly, think about this, because I've been fighting this battle since August, right? No, we've had many discussions about this, haven't we, Luke? So by the way, I'm glad to have you here again this morning. Um, but there was so many people. I remember there was this guy in Discord when they're like, nah, they're not going to taper. They're not going to raise interest rates. This guy in Discord, and he was posting all sorts of misinformation to back this up, and eventually he got into a pissing match with me, and I banned him. But this is all over the place, right? People that think that it's never going to happen, and look, over the last 3 to 4 months, they were wrong. They lost money. Those of us that were short, we did well. Short interest or short the treasuries, we did well. So you kind of have to sit back and think, like, you know what? It does look like the majority of the market here seems to believe something or whatever that's wrong. The fact that Fed is raising interest rates by this much because that they have no real intention of fighting inflation, I don't know if that I agree with that. Like, so first of all, they can't. For them to raise interest rates more than a quarter of a point at a time would be like really problematic. Okay, I don't think that the markets can really handle that kind of a shock. You know, remember the interest rate affects a lot of things, even though we might not directly see it all in the market, right? Second of all, running the balance sheet off and ending their asset purchases are two things that are quite hawkish and will affect inflation and will affect growth. So I think that they are. You don't think that current inflation is problematic to begin with? Well, I think that the inflation that we've been seeing is problematic. What happened in the housing market in particular is unacceptable. Um, I am not convinced that if the Federal Reserve, well, I'm not convinced that under the current trajectory of things, that this is going to be something that we'll still be dealing with in 5 years. Okay. I think that the Federal Reserve raises interest rates, the Democrats stop being so stupid, and the inflation comes back to under control. And then at that point, a year or 2 years from now, they probably go back into the inflationary. There's actually deflationary pressures around, and they just kind of leave interest rates where they are, which is why I think you're seeing that, like, the spreads and the flatteners between the 2 and 10 and the 5 and 30s. So I don't think that, and there's very many people out there that think that inflationary forces are still going to be a thing 5 years from now, right? And that's the thing, is like, it is problematic. Like, oh man. So one of the things that I see on TikTok, for instance, is there are a lot of Democrats out there that say it's not inflation. They're like, we're not seeing prices rise because of inflation, which is kind of stupid to begin with, because you get what I mean? Like people associate inflation with price increases associated with printing money, right? But inflation is just the cost of goods going up in general, and it could be multiple different things that affect it, right? But they say the reason it's happening is because companies are greedy and they can raise prices, and so they're raising prices. And I'm just like, but like, you realize that's how inflation happens, right? People have the money, so companies start asking for more because they can. Like that's how it works. They don't necessarily have to be passing on um, supply problems to other people, right? You give everybody, $1,000 a month or whatever. Like the child tax credits was a lot, guys, and they were giving you that money directly into your bank account all year, right? And what were people doing it with it? They were buying stuff. We were importing 20% more stuff, right? That there's no explanation for that other than fiscal policy. Yeah. So it is a thing, and it is something that the Federal Reserve has to react to. And yeah, probably, in my opinion, if Joe Biden and the Democrats had not passed that extra stimulus bill at the beginning of his term that frankly wasn't needed and wasn't very well targeted, I think that the Federal Reserve wouldn't necessarily have to be raising interest rates so hard. Maybe the stock market might not have blown up as so high either, but in the end, everything comes back to balance, right? But do I think your question is, are you still in the transitory camp, right? And I've kind of always been in the camp of, I don't think this is going to be something that's going to go for 5 years, but I don't think that this is going to be something that's just going to be isolated to the first quarter of 2022. And we were right on that one too, weren't we? Although I can't necessarily say that we really got paid on that one. Trading floor audio tweets. Strategists from Goldman Sachs to UBS say buy the dip in stocks, reports Bloomberg. Goldman strategists don't expect yields to rise much further. I agree. BlackRock and JP Morgan strategists see the recent sell-off is overdone. Well, I think that in some sectors, maybe it's overdone. The one that I'm still kind of like is like those big tech stocks. But if those big tech stocks, that's gonna happen more slowly because people still like those, right? We just need COVID to go away. Well, I think you might have missed it a little bit earlier, but we were saying that it appears that policymakers are shifting towards um, endemic management of COVID in the same way that we manage the flu. That's where it looks like things are headed. There's always a possibility that some other crazy, scary variant comes up and they all freak out again. But uh, I really think that public opinion on this is shifting and that the media is going to have to shift. And the politicians are already the Democrats in particular are facing a real wipeout in the elections this year. And they're trying to pivot. Right. The Democrat strategy, at least at the moment, is to try and minimize coronavirus now and focus on Republicans want to overthrow the government. That's their strategy right now, at least. By the way, on that point, something else that let's see if I was there an article on it about it on Politico. I don't know where they were talking about it, but well, and I have the story, but so basically the House Republican leader McCarthy, is his name McCarthy? Anyways, he was saying that if Republicans take the House in 2022, which under current metrics suggest that that is what's going to happen, that they will put out a bill that prevents all lawmakers from holding individual stocks. Because this is becoming, I have to, Nancy Pelosi, this is like the crazy thing. Like they do the surveys and 70% of people said that congressmen should not be trading individual stocks. 70%. Have you ever when was the last time that you saw a controversial bipartisan issue with that degree of support from both sides of the aisle? It is absolutely insane. And the fact that Nancy Pelosi is not already out there on the House floor putting this bill up tells you everything you need to know, because she has benefited from that more than anybody. And of course, she's not giving it up. In fact, she's kind of been trying to play the other way, like that they should be allowed to. Isn't that nuts? So that is crazy. And that would be the sort of issue that the Democrat constituents would totally eat up, because they're much more concerned about corruption than Republicans. I think that Republicans kind of acknowledge that, we want to have a stable, well functioning system, and that there's always going to be some degree of nepotism and corruption in the government that's very, very difficult to get rid of, and you just kind of have to deal and manage with it. Whereas the Democrat Party is kind of has this idealized idea about government, and if the lawmakers are doing something that they shouldn't be, then for sure we're gonna solve it, right? So it's totally crazy that the Republicans are the one that are gonna put out the bill. Nancy is the best options trader on the block. It really seems like it is. I do think that some people read too much into their trades, but I don't know. Like here's the thing: is Nancy definitely has an edge. Congressmen definitely have an edge, but we don't find out about the trades until a month after they happen. Okay, and then everybody else is looking at her, what she's doing as well. So to try and use that as the sole edge that you base your entire trading strategy off of, I think is a little bit questionable, right? But it is a thing. And so there's this whole economy of retail traders doing stuff, right? And they're all going in on that Nancy Pelosi thing like super, super hard right now. So that's why I feel like sometimes people kind of read too much into it. Like some of these latest options plays that we found out about a week or two ago. Um, I'm not so sure that she has some sort of inside track that says that she's going to make money from them, right? Think that those are probably more just like general bets and in macro plays, but we'll see, I suppose. One of the ones that I was seeing was that a lot of congressmen were buying stocks for like defense contractors. And then when you go and you look at the budget, like there was more military spending in there than expected. Yeah, but they're the lead and the rest is just numbers are trash. Well, so here's the thing. If congressmen are banned from owning individual stocks or trading, I don't think that it just goes away, right? I think that what happens is that the congressmen just give tips to banks and so forth instead, right? And get paid that way. They won't make as much, but there will still be the insiders. We won't be on an equal footing. That's probably what's going to go. Okay, just want to note that the 10-year is back at that 050 area. There does appear to be a little bit of continued selling pressure, so they might try and go through that, but we should expect there to be some big volume and absorption in this kind of area, so we'll see what they do. I need to double check here. Did I miss there's not any other? Well, I think there is at least one other piece of news today, right? Okay, so when the market opens, we've got George speaking. We got Chairman Powell speaking at 10 o'clock. And we've got economic optimism numbers. I thought that there was a housing number of some sort, but I guess not. Yeah, controlling that is almost impossible. You're probably right. And I mean the issue is that the way that the law, I don't think that people understand the way that the law is set up, right? Um what goes on in Congress is not private information. It's public information. It's just that um it isn't shared very much, right? So what needs to happen, number one, is I do think that congressmen should be banned from owning trading individual stocks. Whatever they've got should go into like a blind trust or whatever. I just think that that's like a conflict of interest, corruption kind of an issue, right? But people are still going to trade off of that public information, right? So step number two is going to be improving transparency and record keeping in Congress, right? If something happens in a meeting like that and it is public information, that is, it's not classified material, it should be available to the public almost immediately. I think that there should be a community of people that are all about just reading what's going on in Congress, and that they are just as aware of what is going, or almost as aware of what's going on in those meetings as the people on the committees. Right now, there are records and stuff, but by the time you get them, the information is not very useful, and so people don't do that, or it's hard to find, and it's just like really convoluted and everything. So I think that that's the next step, is you've got to improve record keeping and transparency in Congress. But the split side of this is that information is always going to be an edge. Like, really, all edge in markets can be boiled down to information of some sort. Well, not, I guess not all edge, but the majority of edge that you have control over, and you can go and find, has to deal with information, right? I shouldn't say all edge, because like being big is an edge, for instance, right? Having fast execution is an edge, for instance. It's not informationally based, right? But everything else that we talk about, even if whether it's informational or technical, statistical, it's still technically information, right? People that know what's going on will have the edge. Our goal should be to try and be those people, which is why it's important for us to talk about the politics, because the politics do affect the markets. And if we know more about it than other market participants, we can potentially take advantage of an inefficiency, right? As long as there are big players in liquidity, I'm happy. I don't care who makes money how. Yeah. So here's my other theory, right? Well, here's my thought. Okay. Um, it seems to me that it's difficult, if not impossible, to make money as a retail trader, market making. You literally, it's literally not practical to do in stocks because of wash trading rules. So they need to change the wash trading rules. And in futures, it's just too tight. Like, you only get like a one tick spread, and there's so many contracts in there. It's so difficult to try and take that, right? So when you look at the way that the market is set up, it's basically like, what would you rather have? A market full of human market makers, or a market full of robot market makers? Assuming that the amount of liquidity that you'd get would be the same with both. Okay, assuming that the amount that you get would be the same with both. I think that's not the case. I think that it has been, what we found is that the robots have been able to provide more liquidity than the humans have. All right, but if you could only have one or the other, and you knew that it was going to be equal, what would you rather have? I personally think that we should rather have the humans, because the robots do stupid stuff. They can't adjust to new conditions, right? And so when it's all robots, I think that we become more prone to shocks, and are more likely to be inefficient in stressful situations, right? That's where I think that the humans potentially have an advantage. Now, of course, I really think that we should have both, right? We should have both humans and robots, right? But the way that the market is set up right now, the humans simply can't compete with the robots, right? So here's my proposal. If you are a retail trader, your order goes to the front of the queue. If you're providing liquidity, you're a retail trader, your order goes ahead of professional orders. That means if you're paying for the professional license, back of the line. That's my proposal. Well, I think you want both, really, right? But I am concerned that we have become too reliant on the robots, right? Like anytime we get these flash crashes. Flash crashes were not a thing before the robots took over, right? But once the robots took over, it's like anything bad happens, they just turn the robots off and the liquidity disappears. It's retarded. Or you get some sort of weird situation, the robots just do what their models say to do because they don't understand the situation correctly, so they don't do the right thing. Who wants to sell 75,000 ES contracts? If that's your proposal, the money should stop talking. Well, so the question in that situation would be, okay, how many retail traders would be at the front of the queue at that point? Right? Would be a big question. Because would there be enough space left over for the robots to still make money? But if we were able to go to the beginning of the queue, at the very least, then we could take advantage of a more market maker based strategy where you're just trading the spread and based off of a correlation and whatever, right? So that's my proposal. We're in the early stage. We're in the investigative stages, right? I'm not let's advocate this yet, right? But we should think about that and think about what potential negative consequences that could have for the market and positive consequences, and so that we can see if that's maybe something that we should gain support and push, right? What's your opinion on AMP futures and quant tower for scalping? Okay, so AMP futures is probably the cheapest broker, and you get what you pay for. It's a really difficult question when it comes to your broker, because the sort of things that you're really paying your broker for are things that you hope you never need to use, right? That's like when something's wrong and you got to call them up and you got to take care of it, right? And I'm just, that's not a knock on AMP, but it's just the facts that the support at AMP is not as good as the other guys, okay? Because they're the biggest and they're the cheapest. They don't have the most talented help, okay? You're gonna get better help if you go to Edge Clear or Optimus, one of those other guys. Right. But you're going to pay more. So it doesn't matter. Well, I mean, probably you're not trading 1,000 round turns and are big enough to where the commissions are really like the thing that is controlling how much money you make, but it is still something that you want to factor in. Quant Tower, the platform itself, I would say it's an okay platform. I quite like it. There's a couple of things that I think are really good about it. They're definitely trying hard and innovating, and that's one of the most important things that I'll look for in a platform. That's why I continue to like Jigsaw. But I would also say that the platform still seems a little bit raw to me. So, but in terms of like price, okay, like getting an effective platform for a reasonable price, I don't think you're going to beat Quant Tower for price. So I was looking the other day at ATAS, and I tell you what, they got some interesting stuff. They got like 15 different styles of footprint chart. What? Um, but their software is a lot more expensive, right? Like for the lifetime license, it's almost $2,000. They sure do seem like they've got a nice setup, though. Interestingly, so I'm just noticing here. Okay, so the treasuries did make a push beyond 050. So like I was saying, that's like a hole, but there is some pressure. It looks like you're getting some sort of a sell order or something like that. The 6J is trending down, so that might be a part of it. Also, we're seeing oil rise here. Oil has recovered $80, and uh, the dollar. I don't know. I don't think that that's being driven by a rise in the dollar. Uh, Actually, as this has happened, the E-mini has been relatively flat, so it does look like it's a move isolated to the interest rate complex. But yesterday, when we were at like 050, that was like one spot 8, right? So that means that we have flattened a little bit, right? Does that mean we flattened a little bit? Yeah. The 30 years flattened. Interesting. So even though the treasuries are selling, the 10-year yield is not as high as it was yesterday. Motive wave is good. I tell you what, is the thing that was something that I find frustrating right now is every platform has something that's nice about it. I really think that the Jigsaw ecosystem is the best. I've had these other platforms contact me. They do. If you knew the number of things where people email me and I just, they want to do some partnership sort of a thing, and I just say, it's sometimes it gets a little crazy. It's certainly died down a lot in the later half of 2021. In 2020, it was like really stupid. But when these other platforms come over, that's like, well, it looks like you've got a good platform and you're doing everything right. It's not as good as the one that I have, and I'm only going to promote the one that I'm using. By the way, if you haven't checked it out, just remember I have a coupon for $100 off Jigsaw, um, uh, independent, right in the video description. So you want to take a look at that. And the channel does get a commission if you use the coupon. hmm But all of these platforms that are kind of trying to push order flow type things, ATAS, Motive Wave. I guess Edge Clear is basically Motive Wave, right? And Quant Tower. They all seem like they're great platforms. I just don't think that they're as good as Jigsaw. What do you think I can access? What do you mean by raw data? I think that when it comes to what's going on in the current instrument, once you're getting MBO data, there's nothing more to be had. Right at that point, data comes down to getting data from markets that we don't traditionally have access to. Right, like for instance, you can go and you can pay for the quick strike data so that you can see all of their little treasury analytics live. That would be one, and that's like $100 a month, right? Is it that or access to like the cash treasury market, right? That would be useful for us. A Bloomberg terminal. I mean, if you really want to spend money, man, if you're really looking to spend the money, go get a Bloomberg terminal. Like it's super expensive, but if you know what you're doing, you'll probably make enough money to at least pay for the Bloomberg subscription. You want every change at every millisecond? I don't think that there's any way to necessarily get that. What is so good about Bloomberg? There is just literally nowhere else where you can get that much data in one spot and in an interface that allows you to go through and, with hotkeys and stuff to find what you want to see so quickly. No, I don't think that even if you're at the exchange that you will necessarily see every change at every millisecond. So you got to understand how, like, you got to think about how a queue works, right? There's this thing sitting over here that is, a data structure that's waiting for orders to come in, and they put them in that queue, and then that queue looks to see, do the matches, right? But then there's this other thing that is watching that queue on a set time. It can't necessarily report every transaction. That would be a little crazy, right? So that's what I believe those, like Rhythmic and CQG and everybody, you know. Once if you're getting Rhythmic, um if you're paying for Rhythmic MBO data, that's the best it gets. In as far as I know, Rhythmic MBO data is the best that it will get. And CQG data is just fine too. Well, so when you use Goldman Sachs, you're connecting through the gateways, right? But I really don't think that the data that you get through that looks significantly different. Like, if you were going to go and do a statistical analysis of them, I'm sure that you would be able to detect differences, but the differences that those would make to your strategy would probably just be noise. I really don't see where there'd be like an additional edge, right? And honestly, when it comes to like Goldman Sachs, they connect directly to the gateways, right? Uh, that only matters in so much that they get a better latency, right? Right. So that's actually probably a good point. Is that for the sort of thing that you're trying to do, your latency matters more, right? How long when you submit your order and when it goes to, what position you get in the queue, that's what's going to matter the most. And not necessarily how many level 2 updates you get. But seriously, and the other thing is that like that throttling that may happen to you on Rhythmic and CQG is only going to happen like when the market is really super crazy. That's like a once or twice a year sort of a situation, maybe. I don't think that anybody I don't think that anybody in retail connects you directly to the gateway. And actually, didn't somebody say that might not necessarily be true? But I just I don't think that it's worth it for you as a retail trader to connect to the gateway because your biggest latency is going to be the latency between you and the broker or you and the exchange, right? So even if your broker was connected to the gateway, it probably wouldn't help. And that's where now if you were running an automated strategy and your strategy was in a co-located data center, then that sort of thing could matter, right? What is so good about Bloomberg? But not for well, I think that Bloomberg can be very, very beneficial for retail traders. As an example, for us here in the treasuries, right? So like say we're looking at the 10-year, right? There are indexes out there that show what the 10-year yield is supposed to be that they're using to price this with. So if you wanted to do a market making algorithm, you would really want to be looking at that index itself. And with a Bloomberg subscription, you would be able to get that data, and I don't have access to that, right? Or you could see the transactions going through on the cash treasury market, and so you'd be able to see big transactions. You'd be able to see activity in specific QSIPs, and that would allow you to glean some information here about what's going on. So it's definitely useful for day traders. It's also, with a Bloomberg subscription, is you get to all of this data about the individual companies really quick. So if a ticker is taking off, then you can go in and pull it up in Bloomberg and very quickly know a couple of things that might be important to how you want to trade it, right? It's really useful. It's actually probably more useful for a retail trader trading stocks than anything. It's crazy expensive, right? I notice a little systematic lag at the bid on the exchanges sometimes, and that makes my reads sometimes unprecise. Yeah, but that might be like a bunch of different places in the pipeline, right? No. So actually the only thing that you see on your screen right now that is Ninja Trader is the synthetic dollar index down here towards the bottom center of the screen. When you come over to this other screen, then I have all of my Ninja Trader windows. You notice that I don't necessarily look at that very often. Where is the cracked version of Bloomberg? I don't. Well, it's never something I've looked into. So, did you know that the way that the Bloomberg terminal works is that they give you like a USB fob, and in order for you to connect, you have to have the USB fob in there and everything. Like, it's crazy hard to crack. I don't know if there's a reliable crack for it out there. I'm gonna bet there probably is not, but it could just be your internet connection, though, right? Right, Nasdaq killer. I mean, it's more likely to just be your internet connection, especially with where you live. Like you're getting that data has to come all the way across seas, right? See you later, Big Toasty. Listen, if this channel was having the success that it's potentially capable of, and that I hope that we have someday, and we were making millions of dollars a year from the YouTube channel, because let's be honest, it can happen. There are people less knowledgeable about the markets making more from YouTube. That's just the reality of it, right? I would 100% be paying for a Bloomberg subscription, no question about it. Like it would almost be like I wouldn't even have Ninja Trader 8 anymore. I would just use Bloomberg for all of my charts and stuff. All those, like those at Goldman Sachs, all those traders, they got Bloomberg subscriptions. And it's just kind of telling, right? So that the most important, like the most edge providing service out there is focused on news and fundamentals and information about the individual securities that you're trading, rather than about some sort of chart pattern. I want the data to be packeted properly and sent to me accurately. Well, I mean, I'm sure that what you're getting though is probably pretty darn good. I'm interested to know what it is that you think is systemic lag at the bit, because how would you be able to know that that's what was happening, right? Without having something to compare it to. Right, since we don't have anything to compare it to, and a way to look at it empirically, for all we know it's just in our heads, right? Let's see here, is Fed semester saying stuff? Oh, by the way, that move down might have been from Fed comments. Fed's Mister, it's clear to hear that inflation is too high and the labor market is strong and the Fed needs to take action. Okay. Now, on that point, though, about like a Bloomberg terminal, I fully believe that someday we will get there. It might be another 5 years from now, who knows? But I think you're going to do it. I think that we have good content. I think that our content is a lot better than some of the other stuff that's out there. And it's been hard because I think that the streaming part that we've got here, well, we've got 18 viewers today. So we're about on what we usually are, maybe a little bit less. There was a time when we were getting like 30 to 50 viewers, but I think part of that was just YouTube was doing things differently. Well, now like we've got competition, right? We used to be the only person that streams this. Now there's other people that stream it, and the competition has hurt us a little bit, right? But we still have an advantage over those other channels in terms of content because number one, a lot of those channels don't make real content to begin with, and number two, the things that they're trying to use to trade off are bullshit anyways. Like the one that drives me crazy, it seems like most of these people are using price action. So it's nonsense, I'm telling you. Compared to the ask, but maybe the ask is just not changing as much. Where's Ace? Well, so um Ace has been doing his own thing. So I think we kind of had an understanding, but uh, we here we're talking about empirical properties of markets. The markets aren't very efficient. Ace has his indicators and stuff that he still really believes in, and so I think that we just kind of got tired about arguing about it. So I don't know where you find him, but I'm sure that somebody will give you a little hint, or maybe we'll come in and tell you where to find him. Yeah, it's okay. I don't feel bad about it. I tend to be a little bit like nervous and anxious about things like that, like people, but especially with the stream. I mean, I tell you what, man. If you really overly concern yourself with how many people are watching the stream or how many people are watching the YouTube channel, it will just destroy you, you know? And so I've kind of learned that you have ups and downs, and some people that are really active, sometimes they disappear and then they come back and whatever because it's just that it doesn't necessarily always make sense for them to come in here and be chatting with us, right? And in fact, to be honest with you guys, and unless you really enjoy me and the way that I think, which I'm kind of a weird guy, I got to admit, right? My mind is not the same as most people's, right? And so unless you really enjoy chatting with me, I would expect that most people at some point will graduate and move on, right? That you should come in and learn the things that we're teaching here, and then focus more on yourself, right? That no one is right, no one's wrong. Well, I come back to I want what we teach on this channel, and what I believe in is an empirical approach to markets, and most of the statistical technical analysis methods out there are either not tested empirically or are relying on a very very naive interpretation of statistics, right? So what we have done here is we've looked at real empirical things, right? So we're looking at like scholarly studies and so forth to try and find edges. And most of the things that we learn empirically about the market don't necessarily give you a direct setup, but they are very important to understanding what's going on in the markets and where to try and find your edge. And one of the big things that we've learned is that it's easier for the market to arbitrage away a statistical inefficiency than it is to arbitrage away an informational inefficiency. So that's why we've gone down that road. And that's kind of where it kind of is funny, because there is more evidence in favor of using informational edges and news to trade with, and yet the majority of retail traders don't talk about it. The majority of YouTubers don't talk about it because obviously people want the technical edges. Well, we need to make that argument better in a video to earn ourselves more followers from that respect. Because when we did it on TikTok, I wouldn't say that my TikTok grew a ton from that, but some of those videos did well. I've been doing testing on TikTok, testing different types of messages and stuff to see what kind of videos we want to make. But really, when it comes down to the YouTube channel doing well, I've got my part, right? My part, making the videos more consistent. That's the most important thing for me. Is we got to get every other week is really where we got to get ourselves back to. That's hard with the kid. I tell you, it's a really hard with the kid. Okay. But that's the biggest part for me, and just getting better at writing content, making videos that are more engaging and interesting to you, right? A lot of my content is pretty rote. Like, I'm dumping a ton of information on you, right? And there's still some big information dumps to come, but then once we get done with those big ones, then we really need to move more towards really being entertaining, right? But I think that the thing that's going to help the channel the most, and the thing that's going to get us there, is going to be you guys, right? That's why I keep talking about this, though, is that I want you guys to understand that what we're doing is important. Okay, I can seem like it can be discouraging sometimes. I know, because we just know based on the statistics, most traders don't make money, and so it might seem like, well, okay, I'm spending all this time trading, and maybe I never make money from trading. So what is the point? And I'm telling you guys this so that you know what you're doing is important, because one, helping the markets out and trying to remove inefficiencies from the market is something that needs to happen. Even if you ultimately don't make money from it, it still benefits society. Okay. But then the second part of it here is that you are a group of people that understand something very important that the majority of retail traders don't understand, which is that markets are inefficient, and that informational inefficiencies are more persistent and more difficult to arbitrage out of the market than statistical inefficiencies, right? So I want you guys to understand that, so that you understand the importance of what we're doing here in the channel, so that we can work to get it, to where we want to go, because that's going to be the thing. You guys are going to be the thing that's going to make the channel blow up eventually. It's going to be you guys having conversations on the videos, and, sharing information helps a lot too. And because I got to tell you, some of you guys, like, we're having he probably isn't here anymore, but Lucas visited us for a while. We've known Lucas for 4 or 5 years now, right? I have like one of the most dedicated audiences ever, right? So we've definitely got all of the pieces. We just got to do our parts, and it's going to happen. And when it happens, I promise you, because obviously, I mean, if the channel blew off the way that it could, obviously it would be really good for me, right? I mean, some of these YouTube channels make millions of dollars, right? But if I had $1 million, okay, I am really happy with the way that my life is right now, right? Maybe some point in the future I might need to move houses, because I get into that another day. But at some point, maybe in the future, I might have to move houses. but I wouldn't spend much more than what I've got on this house. Um, but so all of that extra money is going to go back into the channel or the markets, right? Which means um like at that point then I would be developing a team. Because some of these things are crazy where it's like you got this guy, he's making $1 million on his channel. He has an editor and like that's it. And I'm like, are you kidding me, dude? Like if I was making $1 million a year off of my YouTube channel from advertising, I'm gonna have at least 3 employees. There will be people helping us make content. I would like just straight up start hiring analysts and stuff, you know? So it will all come back to you guys in the end, right? But and I know that was going to happen eventually. Eventually we're going to just zero in on the formula and we're going to get to that spot. Just like at some point, you know, we are going to run into a period. I don't think that you're always going to be a retail trader. Can't expect to make money all the time. But the market that truly takes advantage of our skills specifically futures trading, I don't think it's come yet. I think it may be close though. Like um the one of the Goldman Sachs analysts thinks that we're at the beginning of a commodities super cycle, right? If we're at the beginning of a commodities super cycle, then understanding and being good at trading futures is going to become much more valuable in the future, right? And it won't even necessarily be retail trading. Like maybe some of you guys will find opportunities at firms like CTAs and stuff. It could be. I think that time might be coming close for us. So I think that the best trading is ahead of us as well. Well, but the trading part, you never know what's going to happen. But the YouTube channel, no doubt in my mind, because I know I have such a good audience. And eventually, if you guys just keep liking and commenting on the videos, channel's going to get there. And it will be really weird when it happens. You guys it will be really surprising too. Because it's like channels just grow exponentially, right? Like we'll get to 10K and then all of a sudden we'll be at 20K in no time and be like, what? This is crazy. You need to rename your channel to moving average. And well, I have thought, because I am kind of, I at some point I am going to be branding away from day trading so much and more towards what's going on in the markets, right? So I may just change the channel to speculator set finance or something like that. Are you trading Nasdaq? I'm not. I actually pared down some of my DOMs. I had a Nasdaq DOM up there, but I turned it off because I felt like I was getting too many updates and the data feed wasn't handling it very well. I do have the S&P 500 index futures up here. That's what these two on the left are, and also this big window over here. Um, what I'm really good at is treasuries, though. But we're more about macro, right? So, regardless of what you're trading, even if you're trading individual stocks, you should be able to come in here and listen to the stream and be able to get stuff out of it, right? Because if you follow this channel regularly, you should have a really good idea of what the current macroeconomic environment is and what the big questions in the market is, right? Like we talked about earlier, the big question right now that the market is pricing in for interest rate rises. The Federal Reserve is actually only thinks 3. And the big difference between those is how persistent inflation is. So if these CPI numbers come out tomorrow and they're below expectations, probably the treasuries are going to recover really strongly. And the market might go back to 3 interest rate increases instead of 4. That's like the key hinge point. in the macroeconomic environment right now. Yeah. By the way, since the open, S&P 500 has been on the downturn, and as we've been on the downturn, the oil complex has given up its gains. They were up above $80 and they are now back to $79. Maybe they'll recover, but there's a really big up and down on here. Rates seem to have just recovered that initial downturn. Haven't really. There was Fed semester and George talking and so forth. I don't know if that's why the S&P 500 is going down. Mm-mm-mm-mm-mm. The Fed's present ultra accommodative monetary policy is out of sync with the economic outlook. Remember that we're going to have Powell speaking at the top of the hour, but his initial speech. Oh, this is something that happens all the time, man. So Powell will be giving his opening remarks here at the top of the hour. His opening remarks have already been released, but the market still seems to respond to them as it's happening on TV. It's kind of funny. So keep an eye on that. Usually when he's talking, it's not necessarily the best trading. So we'll see. Let's just check here. Couple of maybe blogs, see if what they're talking about here. Oh my gosh, they're pushing Bitcoin really hard this morning on Zero Hedge. Goldman Sachs China GDP forecast as CCP locks down 20 million to fight Omicron wave. Seems to be one thing that's going on here. Maybe we should have been short the ES long before this. I don't know if I want to try and fade it again. We did fade it yesterday and took all of the heat, and it did work out. It did work out. I don't know if I want to take that risk again today, though. Yeah, J Pow at the top of the hour. Yeah, we were just talking about that, Captain Price. Hmm. So hold your yeah. I think that right now I'm I haven't been taking any interest rate trades today, just because I don't expect them to do a whole lot. You know, like I'm on hold until CPI for tomorrow, but for entertainment purposes, we could try and play the index here. I don't know. Okay, so the dollar is moving up here. That's interesting. Bitfinex tweets, the wheels of justice move incredibly slowly, but grind exceedingly fine. Hmm. Just checking the news and so forth here, make sure I'm not missing anything. Ooh, yeah, and just I don't have one of my little tapes on ZB, but I do see 1,000 lot there in at 16. I wonder though if that's part of a spread trade. Well, I don't see. There could be something in the 2-year that we're not seeing. Yeah, 16. Well, they ticked up and it stayed there. They tick up again, and if it still stays there, then I'm going to start wondering. So if it's like a spread trade, they'll tend to move with it. So let's reset things right here. So yeah, let's see on Bitcoin. I see a bunch of stories here on Zero Hedge. Griffin's crypto pivot Citadel Securities to get 1.15 billion from outside investors, including a cryptocurrency fund. And then Joe Rogan says, I have a lot of hope for Bitcoin. Yeah. I think that I gotta say, the sentiment in the cryptocurrency space was not very good yesterday. Even though they bounced, there was a lot of skepticism and a negative sentiment around. It kind of feels like they're cheerleading in it, but I don't know if that's going to help them. I will not put Powell on here in the video, but I will be hearing stuff come through the news squawk. So if he says anything important, we'll catch it. But I think on this, we just kind of want to keep an eye on things, but I don't anticipate making a move here. I think today is a good day to just make sure we understand what the situation and the possibilities are. So 4632 was an area of high volume yesterday in the ES, and we're starting to see a decent amount of volume here as well. But there's so many levels below us. It's kind of hard for me to kind of put some benchmarks on this. Hold on, let's look at our VIX stuff. Put our fixed range estimate on there. Okay, so it's saying that the first deviation is 30.
Block by.
Interesting. Then the next one is 4,600. Okay. Now that order held is still chilling down there. That actually is um well, and there's something happening here in the micros too. There's just a bunch traded at 1.783. Is curious. I I'm I'm kind of leaning towards long here in the 10-year. Does seem like something's going on, but I'm leaning towards long because I think that they might be giving us a hint there. Or sorry, not. We want to be short the treasuries, right? Or we want to be short the interest rates right here. So like what's short 1.78. Seems like the market, yeah. It's probably already too late. All because they only lost 2 ticks on it. The S&P 500 appears to be recovering here too. 49.51 above us is kind of a key pivot point. Actually, if the S&P, if that was all there was on the downside and the S&P was to come, well, they did touch 30. They did just barely touch 30. But for them to come down to like our VIX levels exactly and then bounce there would be pretty encouraging, yeah. There you go. There's another uptick in the Treasury complex. So I again, I'm not sure that I want to put my money at risk just ahead of the chairman speaking and all that. But there's definitely some sort of a meta order. There's definitely something going on here in the Treasury complex, and it looks like it's pushing them up. Maybe if I wasn't so conservative, it would have been a good idea to have gotten in here. Maybe we get to 12. I think that if we fell the 30s, that 4,600 would be the next stop, right? The numbers seem to be lining up pretty well today. I should maybe be more suspicious about that, huh? Let's see here. News Squawk quoting JP Morgan. After remaining stagnant for 18 months, given significant surplus liquidity, loan growth has finally shown signs of life through quarter four, with C&I related loan growth accelerating to 5.5% quarter over quarter, one of the fastest quarterly growth rates since 2011. Jamie Dimon. It's much worse to complain about 15% unemployment and a recession than it is to complain about wages going up too fast. Yeah, right. You think the treasuries will make it back to their open? This spot right here is probably not. They're kind of doing that zigzag thing again. It's been doing that a lot. So I probably a pretty good chance that they come back to 05 and then maybe bounce back higher. We should clear current trades here so we can keep a track of that. I would put an ES and ZN chart under the ladders with 5-minute 2-day view. Why? I don't know. I put on this I need to zoom it out a little bit. I'm showing the Vista chart because that's the cool one that I think people will look at and be like, ooh. I don't know. Hmm. Reuters, Iraq, OPEC's second largest oil producer, will be able to boost exports by as much as 250,000 barrels per day from the second quarter after finishing the installation of pumping stations at its Gulf ports, an Iraqi oil source says. I don't know how recent that is, but that maybe that's part of why oil got hit down, and maybe that wasn't just a coincidence that it dropped with the S&P 500 dropping. That big order at 16 did end up being a pretty good hint for the ZB, right? If we had taken a short in the 30 year based off of that, we would have done well. All right, so Powell's going to be speaking here soon. Trade in the 10-year actually looks reasonably balanced here, market order wise at least. Mm, that sounds like a naive application of statistics, right? The reason the market is inside of yesterday's high low 80% of the time helpful to know other areas of interest. Yeah, but that's an extremistan event, right? That even though it's in there right now, it doesn't really very effective at telling us that it's going to stay in there as a profitable strategy in and of itself. Plus, I know you realize like what is up here. What you see on the screen is primarily this is what I need to is primarily so that this is what's recorded, right? Like if I really wanted to keep track of the highs and lows and that sort of stuff, I'd probably go and put it over on this chart and my 5-minute chart second from the right. Or I could come in and do I even still make them? I don't know if I almost never come in and like put it in, but I can come in and go into the settings here and load levels and load. I don't know if it's making them right now or not. I might have taken it off of the chart. Jeez, it's a little slow. It does. It does still make them. Load. Okay. So it is, what was yesterday's low? 45.72. Oh, so I just gotta go a little lower. There it is. Previous low. Yep. They're around the DOM. Now they're there. Yeah, I have it. Not, I don't. I don't know. Like, so here's the thing. Uh, so first of all, what I have up here on the main screen is in part, if you're a new viewer, to be attractive. It's like, oh, what is that cool chart in the upper left, right? Um, but bigger picture, the market is more statistically efficient than it is informationally inefficient. So I am no respecter of levels. I am no respecter of levels. Um, if there's a level, people are really, really looking at it. Often just means that they're just going to screw around with the level a lot, and it's going to be frustrating. You'll hear me call levels out, but I'm not calling levels out like that's where they're going to go to or that's where they're going to bounce or anything. It's just like a benchmark for me. It's like, if we're really seeing a strong flow, then we should, next spot they should go to is this, and then this, and then this, and this. And if they don't get there, that tells us something about the flows that we're seeing, right? But I'm not making a conclusion about where it's going to go based on whether it touched the level or where it is now compared to a previous level. No respecter of levels. And if I started focusing on that too much, I think that would be counterproductive, right? Because what do we really care about? Informational inefficiencies. Right now, because of Powell speaking, doesn't necessarily mean a good reason to talk about it, right? But for CPI, I think we definitely have some edge above what most people out there are saying, right? Because most people don't realize that, well, the Federal Reserve doesn't think that the inflation is going to continue to be crazy. And so if inflation in the report tomorrow is somewhat tame, the market may reprice to 3 interest rate increases instead of 4, because that's what the Federal Reserve is forecasting right now. Mm. Well, but that's the thing, is like, if that's something that traders want, like, they should put it on their own chart, right? I don't know. Plus, the other thing is, what you come and you put a chart on of that. I did that the other day, and it's such a freaking mess. It's such a mess. It just looks like noise. Eh, I think that this chart is cool. It's actually useful too. Actually, looking at it right now, we might need to adjust this a little bit, because we're not, circles are, well, maybe that's just because of the open. I'm getting too many circles though, wouldn't you say? Yeah, whatever. There we go. They're bouncing pretty good here. And they did get above that 46, 48 area that I said was kind of a little bit of a turnaround point. So next stop, I suppose, would be the open, right? See, look, now I've got all of these things, bull bear zone low and all of these sort of things. But I don't want to be teaching people the logical fallacies or statistical naivety around levels. Like this is taught a lot in the futures trading space, and I think I'm not saying that it's useless, but I think we're doing people a disservice. I think we're doing people a disservice by saying, okay, because X thing happens 80% of the time, you should take a trade based off of that. I think that that's a naive understanding of the statistics. These are extremist stand events. In order to really pull out a useful statistic of that nature, you need a lot, and I mean a lot, of data points. And you have to factor in the risk into the statistic. Otherwise, how do you trade with it? Right? It really is like when you think about it, these a lot of these statistics are like over the past year. When you're talking about something that to really pull out a statistically significant result, you would probably need like 10,000 samples, which is like 10 years worth of data, right? Why are you talking about UAL? That's United Airlines, right? Well, oil, they took that nosedive when the S&P 500 opened. They are still trading um pretty close with the S&P 500 and are bouncing back up, almost tagging 79 and a half. Oh, it's a CNBC headline. I agree, but does not mean it's not useful. In time, you'll apply many filters, and you will find times you're initiating like big money. Yeah, yeah, it doesn't mean that it's not useless information. Um, but then it kind of comes into, okay, what is the most useful stuff for me to put up there? Well, the DOM is really useful because that's like everything, and that's kind of really the focus of the channel, or has been. And so people being able to go back and watch the order flow, that is important. I think you're kind of suggesting though that you get different kinds of order flow and setups around previous day high and lows and so forth. And I have not been able to prove that sort of a thing. I don't know. It's a very it's you've been around for a long time, live action. So you're probably a little bit like, well, this is not like you, Seth, huh? Because I used to be like, I'll put up anything and just watch it and see what it does to investigate if we think it's cool and interesting, right? We've done that a ton. Um, I think I kind of have been leaning the other way for two reasons. One is because of this thing that I've been saying, that uh, there's more informational inefficiency than there is statistical inefficiency. So I've really been shying away from focusing too much on those statistical inefficiencies right now, because especially the ones that I think aren't really, you know, are a naive application of it. Uh, but then the other thing is that I had a bunch of stuff on the screen and I kind of had to pare it down. So I'm kind of in the mode of uh let's use the screen real estate the most effectively. I mean, I've got this big thing. I tell you one thing is it sounds like Jigsaw is going to be implementing some other features that will allow us to take advantage of like our programming and so forth, right? And when that happens, probably we'll be able to put those levels in our alert columns, but maybe we'll be able to draw them on the Vista charts as well. And when we get that, I will put them on there. See if we can get something on there. Right now though, like, we made one change, which was we made the Vista chart a little bit more prominent. Let's just kind of see how that goes. I don't know. I don't think that what I have on my screen really has that big of an effect on stream retention, but hey, you never know. Probably in order for us to see any effect on that, we'd have to have a lot more viewers, huh? Oh boy. It is yeah, the whole stream thing is kind of interesting because for a long time we really liked YouTube because people would discover our channel through YouTube. Seems like that's not happening as much anymore, doesn't it? Like the last 3 to 6 months, right? It seems to be the same consistent group of people. So maybe we need to push our efforts elsewhere. Well, I do TikTok. I think TikTok's probably the best place to get like the message out, but not very many people translate over from the TikTok for whatever reason. I was just thinking about something else. But oh, I see what it was. I have to read more about that later. I don't know if I want to read that on stream. By the way, we were kind of looking at, we had that big move up and we thought maybe we should be long. But I didn't like that spot. That's where it was like we'd get a pullback. And then I kind of lost track of it. And now I'm coming back to it and they're like right at the lows. Didn't really hear anything or see anything from Powell that I think he's still reading his opening statement. So I'm not sure why it moved that way. I didn't really see anything in the 6J either. I'm seeing Bitcoin is doing okay this morning. A lot of these markets are following the equity indexes today. It's a little interesting. But I'm not sure why the treasuries fell down there. I am seeing though on the 30-year spread some flattening still. You say that I'm still censored. It could be that I'm still censored. If I'm, well, I don't think that I'm hidden from like, let's come look. Come look. So when I come in as myself, I definitely see it. Yeah, when I log in with my other account, I see it. If I search for speculate or Seth, it shows up. No, I don't think I'm being throttled. I do. So like there are certain features like clips and like the stuff that YouTube is kind of like testing or whatever, um, and or the shops that it won't let me have, which suggests that there is a mark against my account for some reason, but not one that I think is limiting my reach. Hmm. It has filters in place. So what do you mean by that? What if we went incognito mode? And let's go to incognito mode and go to YouTube. Speculator Seth. Yeah, it shows up. But I bet you if I do day trading live, I don't show up. Right? I'm not competitive. I'm not competitive for the keyword anymore, right? Matt has really taken over that. Maybe we need to change the title of the stream. Wait, what is the title of the stream? Day trading futures live stream? Hmm. Let's go back here. Wonder. So if I go to, let's do YouTube Studio, and I go to content, live, and then we go back, like way back. Let's go back to, say, May. Details. Day trading futures live stream. Okay, what about this? Trends.google.com. Interest rates, treasuries. Oh, interest rates is much more heavily searched. Blah, 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 blah. I don't know. Bond. Okay, how about that? Let's add bond. Bonds. Oh, bonds. Bonds is even higher. So what if I called the stream day trading bond futures? Minimize that. Day trading bond futures live stream. Maybe. I don't know. I think it has much more to do with competition in the algorithm, though. Not sure what we can do about that. Hmm. I don't know. I guess I have some thoughts. I think the thing is the channel itself will matter more than the live stream, but we should still try and work on the live stream too. I don't know. I guess it's not bad. I mean, we're around 20 viewers is still fine. Another thing that I could do though, I've actually, oh, this is scary to talk about. I don't want to talk about this, but I'll do it anyways and see what you guys think. But one of the things that I have thought about is maybe we should take days off during the week to put more time towards making video content, right? Like if there's nothing going on Monday, we should not stream on Monday and make content. Or maybe it should just be let's spend time writing scripts. I can write the scripts here live on the stream and you guys can help me write the scripts. That might be another thing we could do. What do you guys think about that? Was you were using the hospital computer has filters? So your hospital computer has filters that will block certain YouTube channels? That's a little weird. That is a lot weird, actually. I don't even know what you can do about that. Probably is nothing I can do about that. I don't know. Whatever. Well, S&P 500 made an okay little recovery, but they only recovered about 50% of it and are now just kind of chopping around the 50 area. I'm still getting a lot of bubbles on my chart, so that's interesting. Oil's still where it was. Gold looks like it's chopping around a lot. Well, we still got 30 minutes left. I think we might get another set of moves here. I don't know if it's going to be in the interest rates, though. So I'm going to bring this back up. Once I add bonds on there, what are the recommendation related queries now? Those are rising. I want top. Mortgage interest rates, loan interest rates. Refinance rates. Maybe we need to make more videos just about mortgage rates and stuff like that. That would maybe bring more search traffic through. Hmm. Well, I know what we gotta do. It's okay. Big thing is we got to make good videos, right? The videos are video and you guys commenting on the videos. That's what's going to get us there. We're going to get there. There's a little bit of that 10-year convexity coming in a little again today, right? 5 and the 30 are up 2 ticks and the 10 is still flat. Unless they reset there and I just didn't notice. Or I didn't reset them correctly. I suppose that we're still at relatively, I suppose anywhere under 050 would be okay to buy. I've got a lot of thoughts going through my head about how to promote the stream a bit more. The thing that continues to be frustrating about promoting the stream is that, like, if you come in and you put a big number on it, that attracts a lot of people. And I refuse to do that. And if you come in and you tell people technical analysis is wonderful, that seems to attract a lot of people. Don't want to do that. So it's interesting because the thing that really pushed me towards using YouTube more was that I was getting discoverability from the streams. If YouTube's not giving me that discoverability anymore, it kind of makes me wonder, well, I don't know if it matters, because I don't know if we were on Twitch. Twitch doesn't have any discoverability either, right? There are some nice things about Twitch that are a little bit more fun for it. That would be a little bit more fun for us, right? But, yeah. But it kind of means that in order to grow the stream, we might be, to promote the stream, it's going to have to be using other forms of media to direct people to it. Like when we make TikToks, make sure that people know that I live stream. Changing the DX to the 6, no, why would I do that? I mean, I'm seeing more information with the dollar index. It's actually that little top, that little chart down at the bottom, at the top, is a 60. It actually is a 60 chart, and then I've just got the synthetic dollar index on top, or underneath, whatever. So you're getting both of them there. Cool. Yeah. The other thing that would help is I do think that we're getting to the point where I would like to work with other creators too. It's just most of the creators out there are full of shit. You know what I mean? Most of these guys in the trading space are still pushing things that I'm like, no, that don't work. ES sure is chopping. That's only been 5 minutes there now. It's only 8:30. So 5 minutes of chop with me being introspective about the stream. Aldo's a good guess. The thing that's kind of can be frustrating is sometimes it's not a guess. Sometimes you know exactly why things are happening, and but there's just not a whole lot you can do about it, right? Like what helps the channel the most? Engagement. Making good videos. And all I can do is make good videos, right? How does the stream work? I don't know. Probably we should be trying to change the titles earlier, because what we put in the title does affect what you get, right? So like, let's go test it. So if we come in here and we do day trading, probably I'm not going to show up. This one right here, sometimes they've got stuff going on, but sometimes it's just a chart, and I'm like, why do so many people watch this? It doesn't make any sense to me at all. Actually, a lot of these ones that are going don't have that much people watching. This Daniel Inskeep video, I think, helped Matt a lot because he's got 1.3K watching again. But I wasn't a fan of that video. I felt like there was a little irresponsible. Okay, so if I search for futures, then let's just change the filters for live. I do show up. Day trading bond futures. I do show up if I search for futures. But I'm at the bottom. It's a little, the thing is I've been doing this longer than anybody else, right? And to be at the bottom of the heap is a little bit disappointing. I guess it's disappointing now because we care more about it now, right? It used to be like, oh, we don't necessarily want to be very big, right? Now we kind of do need to build it because we want to get this message out. But it seems to me that I'm not very good at that. At least not right now. They pushing down again in the treasury. The 10-year. Failing 040. But now if I say bond futures. Da, 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 da. Now I'm right at the top. So I've at least found a keyword that I can dominate, but I don't know. Put an Obama photo in the background. You really think that? Nah. I think right now, full stop. The number of people that come to the stream is primarily determined by the YouTube algorithm. And the YouTube algorithm is no longer favorable to us. Basically, well, number one, YouTube stopped promoting live streams as much as they used to. And number two, there is more competition for the term day trading and live streaming, right? So kind of what happened was because our focus has always been on the treasuries more, they people were more interested in the S&P 500, and so that's why those, we kind of fell behind. We kind of fell behind, and then the other people created more engaging photos because they put a number on it. Right. This one is actually, it's kind of funny that's what they're got like a much bigger channel, right? That's another thing, is the number of subscribers is going to be a big component. Actually, maybe not, because and Matt's doesn't have a number on his anymore. But Matt's channel is a lot bigger than my channel now, right? Oh, that's weird. It won't let me see the channel. It says I'm offline. What? Oh, there we go. He has 51,000 subscribers now. That's funny. So the Daniel Inskeep video really helped him out. But it is a very exponential thing, right? Like probably by the point we get to around 10K, if we continue up with the channel, at some point it's going to start growing faster. And usually when I've looked at it, it's around 10K where things kind of start to can get crazy, right? Powell is saying a few things. I'm not seeing like a huge move in the market. Kind of watching this 10-year here to see if they hit into O2 half and O2 again. And I'm also wondering if it's like yesterday or later, it makes sense to buy the treasuries, but later in the session. Because yesterday was like that up until about this point, and then we took off, right? I don't understand what you're saying there, live action. Tweet is unavailable. That's crazy. You retweeted the tweet and it's already been deleted. That's funny. We asked recently about the relationship between the Fed futures and fund futures and ZQ and floating effective funds rate cash EFFR. How well does futures term structure predict price in coming policy actions? Here's 10 years of continuous daily front month versus cash. Okay, they do take O2 half quite easily. In fact, they're now at the low of the session. Again, I'm seeing like some convexivity. Um, I'm also seeing some steepening. So the 30-year has the 30-year is coming back to in line with the others, but on that move it fell harder because it was higher to begin with, right? The 10-year is still like 2 ticks below where these were last time that they were at lows though. So there's convexivity with the 10-year. And they did take these as they took this. Oh yeah, you're right. 2016 at 155.16. It's kind of curious. I don't think I can really completely sort out what's going on in the bond complex right now. It seems like there's some things going on, but it's not anything major enough that we can really make like a strong read or guess about what's going to happen. I'd say that there's still somewhat pressured, and maybe they're just somewhat pressured because Powell is speaking right now. Powell, we can impact demand but not supply. Well, you can impact supply, but it takes longer and more effort. At his congressional hearing, Chairman Powell states that high inflation is a severe threat to maximum employment. If this view is held in a sustained manner, it constitutes a notable change in how the Fed has been thinking recently about the cost benefit of running the economy hot, says Mohammed El Aran on Twitter. I think that pivot was made a long time ago, but again, the market seems to be behind on this. Perhaps though that is why we are seeing treasuries fade here, is that they're making that trade. Maybe I should just take the controversial approach to the stream and just have like technical analysis sucks in the in the video title. I wonder now that they've kind of breached some of those lower levels if the 10-year goes back to 128 even, or if the yield goes back to 1.8 would be kind of like a key levels, maybe benchmarks we can use. Fed's pal, at the moment, we need to pay more attention to inflation than to the maximum employment goal. Ah, okay, now that's a little different, right? That's like if unemployment rises a little bit, we're still going to focus on killing inflation. Adding a commodity like oil may help, maybe. Like the issue is that the keyword we need to be competitive in is day trading, right? So the way this is going to work is we have day trading in our title. The more people that click on our stream, the better the click through rate of it, right? The more likely it is going to be to show people. And the more subscribers that we have, because the more when you have a subscriber, it's much more likely to show the live stream on there too, right? So that's kind of where we ran into a problem. Some other streams were using like money amounts in their video titles, and that kind of gave them a boost, and they got more subscribers. And now we're competing with channels that have almost 10 times as many subs as we do for the same keyword. Then we don't stand a chance, right? So if we want to get more clicks on that particular keyword, probably we need to make a better thumbnail. So how do we make our thumbnail better? Like we got to put something in it that makes people, when they see that, they go, "Oh, this is special. He's going to tell me stuff that other people aren't." I don't know if there's anyone on YouTube that covers grains. Probably not. But again, like it comes down to how many people are actually searching for that, right? So like I closed it and bring it back here. Trends.google.com. Okay, so we were doing bonds, stock market. Okay. So we put bonds in our title, right? But look at how much more. Oh, the term day trading is not as high as bonds? Well, that's not right. I've probably got the wrong. We've probably got the wrong term in here. Maybe it's just stocks. Yeah, stocks is better than stock market. But I'm surprised that day trading is not higher than it is. What's with that? Well, that term is following the trends that it should. Day trading. Trading? Trading is a much more common term. Maybe we should just be using that. What about live trading? If you combine them together, does it? Yeah. Maybe it's just multiple word one is wrong. Okay, so if I go trading versus stocks. Trading is actually a better term than stocks. There you go. Well, yeah, with the pandemic, there was a spike, right? The term stocks and trading was a lot more popular in January of 2021 when the GameStop thing was going on than when it is right now. Right. Said maybe that was anywhere below 050 as a good buy and look, come back up. They did not breach those levels below us that we were looking at, like to come up to 1.8 or to break down to 128 even. So like I think the thing is I'm gonna go private window so that when it gives me search results there. Okay, so if I just search for trading, okay. See, like it's not like these aren't bad thumbnails, right? It's just, is it really all that different from mine? Dun, 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 right? I got live stream, I got day trading, right? I got the same words in front of it and I got a picture of me. Maybe the picture of me isn't the right picture of me to use, but in the, in the background and stuff. But I think having the computers there is better. But, if it instead of it being day trading, it said something like something that was beyond just like, so I'm searching for day trading, but then I see there in the thumbnail, this is the thing that I think I would rather watch Seth stream because he's going to teach me this, right? That's what we need to figure out and put in there. And maybe that will help us. Let's come back over here. Filters live. Okay. Stock market live. Oh, that's interesting. See, this is one of those ones that I think I was like, crappy advertisement. Okay, yeah, this is one of those ones where it's like, all you see is a chart. I'm like, what? How do they have so many people? I think it's because their channel is called Stock Market Live. So that kind of helps them. I'm gonna think about what I think I want a better picture of me. Oh, I'm actually do show up here on this one. Yay! I think I want to pick a better picture of me, but I'm gonna think really hard about it. Maybe talk with some other people. Brand it. Better branding, right? Better branding is what it comes down to. Dum, dum, dum. Hmm. Another thing I could put in is I could put Dom trading. That's probably what that's actually, that's an interesting thought. Um, market depth topic. Want to be depth of market versus Dom. Or no if. Depth of market trading versus Dom trading. Then Dom trading does better. I try to share the trades you're looking at. Well, you know what? Live action, I've noticed as of late that we've been in sync quite a lot, haven't we? I feel like that you do something that I think a lot of people do that and not realize it, which is you are coming in and you're thinking about what are the flows that we can see today. But then you don't think about the flows, you think about the technicals. So when you do well, you might think oh, well, it's because I knew about this stat and this stat and this stat, but really the edge was you knew with the right place to be looking because you knew what the flows were going to be, right? Because you definitely you trade different things, like you're definitely factoring that into your trading, right? And so oftentimes we do end up being in sync. And I would like to do more of that, like a bit more of a focus on what are the flows for the day going to be. It's just that like when I start the stream, not very many people are there at the beginning of the stream for whatever reason. So probably what I should be doing is I should be doing a little bit of a recap at like 8 o'clock or sorry, at the top of the hour at 7 o'clock or something like that. Like we could we could sit and wait for Future Trader 71's thing to be over with and then start doing our rundown or our summary of where we're at that point. But I'm looking at this now and I'm so what if I do this? What if I do day trading versus Dom trading? Well, then day trading Dom. Now I've got all the keywords in there. Okay, so there are a couple of thoughts here. Okay. Better thumbnail. I want my picture in the thumbnail to be happier. I want the DOM to be in it. And I want better branding somehow. We'll think about this today. This should help. Okay. See, it took me a little bit, but I was able to get something out of it. Right. At first I was like, why am I stewing about this? Not sure if there's anything I can do, but now I'm like, oh, actually there are some things I can do. Hey guys, it's time for me to get going. Just remember, uh, later on into this that we go, I suspect that it may be more bullish, especially over in the treasury side. Although like we still got Powell speaking, but I still think that there's a reason for the treasuries to move up, and so we might see after the European close and everything else, the treasuries move up. Um, but ultimately, the CPI is so important. So um, don't blow your account today, right? Blow it tomorrow with CPI. Anyways, I will see you guys tomorrow. In the meantime, stay profitable, friends.